But come on in, Dick Bove, as we always say, the only analyst who ever appears on this program because he's right and he goes straight at it. So, you've been a supporter of bank stocks right from the get-go. You're the one who said they were going to go straight up. You're the one who's been right. So, which banks have further to go? Do you have a couple in mind for us?
Well, you know, I think that you mentioned one, Goldman Sachs, at the outset. I think that the world has now moved in the direction of Goldman Sachs after 10 years of ignoring it. And I think that what you're going to see is, first, all of this, if you will, upset in terms of what's going on with currencies and interest rates will force corporations around the world to rebalance their balance sheets, and that will result in a significant increase in trading. The increase in the value of common stocks in general will stimulate a lot of common equity offerings next year, both secondaries and IPOs. You'll see corporations, you know, making more mergers. All of this is what Goldman Sachs does. It's the core of its business. I think that Goldman Sachs has 2 or 3 years of very, very attractive, if you will, earnings ahead of it.
Okay, so now you picked Goldman Sachs, and I know about that, and it did indeed perform very well, and you say it's got more room to grow further. You're also like Bank of America, Citi, and JP Morgan. You think all 3 of those stocks, you think, have some way to go still on the upside, right?
Yeah, I think that, you know, the first thing you have to notice is, let's assume we're going to repatriate, I don't know how much, a couple of $1 trillion. All that's going to wind up as deposits somewhere in some bank in the United States, and those 3 banks are going to get the biggest share, along with Wells Fargo. They're going to get the biggest share of those deposits. What are they going to do with those deposits? Well, you know, we're talking about rebuilding manufacturing capability in the United States. We're talking about perhaps some fiscal stimulus. That's going to require an enormous amount of bank lending. So the deposits will be there, the bank loans will be made, the interest rates are going to be a tiny bit higher, so the margins will be better. So I think what we're looking for in each one of these companies is we're looking for a surge in earnings. I think that, you know, as we get into 2017, analysts all over the country are going to be raising their estimates for these companies. Plus, of course, they have a pretty big oar in the capital markets industry also.
Okay, Dick, thanks very much for being with us. You've been right so far. Let's see what you're going to do for us in the future. We'll be back to you, and that's a promise. Thank you, Dick. Good stuff.